Hey, what's going on, guys? Corey Smith here with CoreFX. Welcome back. We're going to do another pre-week market analysis video. This week will be for March 4th, 2018. We're into a new month here. If you're new to these videos, guys, my name's Corey Smith with CoreFX Trading. I do these videos through T3 Live on their YouTube platform. Basically, it's a full foreign currency market breakdown. I go over the prior week's news events, top performing and underperforming currency pairs. Then I go over the week ahead, what's going on in the news, what's going on for each pair, and what to look for. I also go over a technical breakdown of each of the 8 major currencies charts. So I go over technical levels we're at and what we can look to anticipate for the week ahead. It's really a full-on breakdown of everything going on in the foreign currency markets. Covers a wide range of events from technical to fundamental and all the different pairs. So it's a one-stop shop for your news to get you ready for the week ahead with foreign currency trading. I also have a full technical analysis breakdown with trade analysis for my students on corefxtrading.com. But this is a video I do live for free through T3 Live's YouTube platform. They have a great page, so make sure you check out everything that they offer. They have some really talented traders putting up analysis and videos there every day and week on their site. Make sure you subscribe to the page if you like what you see so you can get automatically notified when new stuff comes out. I'm gonna go ahead and jump into this here, guys. Thanks for tuning into these. I appreciate you taking the time, and I'll go ahead and jump into this here. So starting with the top performing and underperforming pairs for last week. As you guys can see, we had the Japanese yen, euro, US dollar as the top 3 performers. Japanese yen leading the way with a over 1% gain on the week. As I said last week, the yen did look very bullish to me, and the yen did perform as expected this week. Euro and dollar also were decently stronger as compared to the other pairs. Then we had the CAD, pound, Aussie, New Zealand leading with the weakest, as the CAD leads the way. We have a big Bank of Canada interest rate meeting this week, so that'll be interesting to see how the CAD performs. But these were the top performing and underperforming pairs last week. We had a pretty big risk-off move in the markets again. Stock markets moved lower as President Trump enforced steel and aluminum tariffs, which were taken negatively initially by the markets, as well as Jerome Powell's testification as the new Fed chair, sorry about that, for the U.S. Federal Reserve. He was more hawkish than expected, and this weighed on the markets more than anticipated as far as equities go, which is what really led to the yen's overperformance, as well as technical levels on the yen just looked great, as I covered last week. The Aussie, New Zealand, CAD are typically top performing pairs when there's risk on. This was a risk off week, so usually we do see some money leave them and go into the safer assets like the yen and the euro and the Swiss franc, and the dollar as well. So, aside from that, we have the technical breakdowns here for each individual pair. The US dollar we saw was up around nearing this level, this overhead resistance, the beginning of last week. I thought we might hit this resistance area, respect this neckline, and sell off or break up higher. We kind of got a mixture of the two. It initially broke this level here, moved up, but then we hit this. Really, this is a big supply zone from this move lower that we had with this drop, accumulation drop. Out of this drop, we created this supply zone. Price came up. It did break above this neckline and prior resistance that I was watching to hold. However, it hit this 50 SMA. We got a bearish engulfing off of it, and price continued to sell off for 2 days after hitting this zone. So we're getting a little bit of mixed signals here out of the dollar, as we have been seeing lately. We're going to have to watch and see, but this could show us a reversal and roll back over down to this 89 to 88.50 area down here. But we'll have to wait and see. This double bottom neckline did break out above, as we thought could have happened. However, it quickly reversed. So we'll have to wait and see what the dollar does, as it's showing us a little bit of indecision here. Taking us over to the euro, we have basically the exact same thing. We had this double top. Thought this neckline might break, retest, and fall, but we had a break of it and then a strong bullish bounce off the 50 SMA, off this zone, out of it. We don't have a demand zone like we had a supply zone on the US dollar, but we still had a false breakout here. So we'll have to wait and see. This could still roll over and complete this double top, But initially this neckline was broken and then reversed hard, so we'll have to wait and see what goes on here. Yen, as I've been showing you guys, beautiful setup. Broke out of this long range bound move, came back to retest it, and then pushed higher this week exactly as I was hoping it would do. I do think we will continue to see an increase in the yen. We might see some pullbacks along the way, but I do see the yen moving back up to even possibly the 96, 97 range on this chart. However, the initial move we could expect to see, as I went over with you guys last week, take the size of this range. Once we get a breakout, we could expect a 1-to-1 move of the breakout, which would take us to right around the 94, 95 level. So I do see some bullishness in the yen. Not saying that initially it's going to just continue to shoot higher. We could get a little bit of retracements in here, but that is a very big possibility. And I do overall see some more bullishness in the yen from fundamental and the technical side of things. The pound, kind of getting a little bit of a mixed picture here as well. We did break structure. We set a new lower low, broken close as we've been falling off of these highs here. As you can see, we did break up above this zone, but then it quickly reversed, and we've kind of been melting since then. So we're going to have to wait and see what the pound does here. If it breaks this counter trend line, this could be a bullish sign. This could move higher. However, I see the pound potentially continuing to roll over as we're just not seeing any clear, strong price action. Canadian dollar, as I said to you guys last week, we were in a downtrend. We could see a break of this support and continue to move lower. That's what we saw here, but now we have hit a very strong support. As you guys see on this chart, it has respected this level multiple times. Last time it hit off of it, it exploded higher. So we're back down to this level now. If it breaks lower, this could make some significant moves to the downside, but I could see a little bit of a bounce here off this zone. Maybe up to this level, maybe not quite, and then potentially get a stronger move lower to break that zone. I don't think it'll have the momentum right now to just blow through that zone. I think it will take a little bit more time to blow through it, a little bit more mean reversion, but ultimately this support is a very strong level. 76.50 has held very significantly, so we could see a bounce or we could see a break. We're going to have to wait and see what this does here. Swiss franc, it looks choppy on this daily. As I've been showing you guys, we came up higher and we've kind of just been chopping around since. But if you look on a weekly chart, you can see we did break and close above this level and have not been able to move back below it, showing that this broken resistance turn support is holding. And it's holding here on the weekly with a very strong doji candle. We have it bouncing off 200 SMA. This long lower wick shows that during the week, price tried to move lower back under this resistance turn support, but ultimately failed and ended up closing all the way back up here. So this is a bullish sign. We are in an uptrend. We are above the 20, 50, and 200 SMAs. 20s crossing the 50 SMA here on the weekly. On the daily, we have price above the 50 and the 200, the 20s above the 50, and we are right about at the 20 SMA. It's starting to roll over, but we are still bullish. Another one here we'll have to wait and see, but I do see more bullishness coming out of the franc than I do bearishness. Onto the Aussie, we did set a lower low. As we saw, we had this strong move upward, then we came in and had this strong sell-off, set a lower low, rallied up to set a lower high. We moved lower. We were near this support at the beginning of the week, and we did actually break lower, so the Aussie is now under support turn resistance. If you see this weekly trend line within this weekly channel we've been in, you can see we still have some room back to the downside to around the 76 level to test this upward trend line, bottom of this trend channel. So we'll wait and see, but Aussie I do see moving lower. Could most likely move in waves like we usually see in these markets, but I do all in all see a downside potential out of the Aussie. Taking us to New Zealand, as you can see on the daily chart here, we are back down on support around this 72 level. We are ranging still within this range, but if you take it to the weekly, you guys can see that we are in a nice high base under this 75 support resistance still. So we've had a strong move up, consolidation, could see another strong move up if we break out of this bullish flag / rectangle pattern we're sitting in. On the daily, again, it looks a little more choppy, but that is still a bullish move up. Range bound move sideways. Could see a bullish move higher if we break this 74, 75 area and move up. So New Zealand's on support in an uptrend, in a high basing pattern. I do see some upside out of New Zealand in this chart, technically speaking. All right, so this is going to take us over to the news events. going over what happened last week in the news. Last week was not the very best news-packed week, but we did see some decent movement and a lot of volatility in the equity markets. Sunday, we didn't have anything going on, as I covered last week. Monday, we had European ECB President Draghi speak. Nothing really was said too exciting, not much movement, and the euro was pretty much unaffected by any of the announcements. So really nothing going on Monday. Really across the board, not much trading going on Monday, not much movement going on. Taking us into Tuesday, the U.S. stock market did rally a little bit, but taking us into Tuesday, we had the German and Spanish CPI. German out of Europe, German CPI was as expected. Spanish did beat expectations, but again, nothing really crazy going on there, as these are just two economies within the Eurozone. After that, we had U.S. dollars durable goods orders missed expectations. However, the Fed Chair Powell's speech testifying as the new Federal Chair Board governor kind of overshadowed this, so this report didn't really mean much. Powell painted a more optimistic picture for the U.S. economy. He came off more hawkish than expected, and the possibility of 4 rate hikes this year has gone up and is actually on the table now, when it was really kind of counted off before now. Consumer confidence in the U.S. was an extremely strong reading again, showing high confidence. As you guys saw, we did see retail sales sluggish a little bit in the U.S. the past couple months, worrying us about consumer confidence levels and how willing to spend money consumers are. However, these consumer confidence surveys are continuing to show strong readings, showing that those retail support results really aren't anything to worry about yet. And although they are starting to add up a little bit, they're not really going to be anything of significance to watch for. Then we had New Zealand's business confidence surveys, which did beat expectations and showed a pickup in confidence levels out of the businesses in New Zealand, which is a good sign. This is a leading indicator. Then we had Chinese manufacturing PMI numbers, missed expectations. Again, we were in a risk-off environment again this week, as Tuesday stocks moved lower. So did Wednesday and Thursday. So this, one of the biggest economies in the world, showing poor manufacturing PMI numbers, could help add to the fire of this downtrend in the equities, of the downward selling pressure in the equities and the risk-off environment we've been seeing, but nothing too crazy. Following that takes us into Wednesday of last week, last day of the month. We had European flash CPI, came out as expected, so not much movement from the euro again. Then we had the U.S. dollars preliminary GDP, another one that came in as expected, so not too much movement going on. Slightly bullish U.S. dollar, but nothing really significant going on. Taking us into Thursday, we had manufacturing PMI out of Great Britain. As expected, slightly higher, not really much influence. This is the Purchasing Managers Index for the manufacturing industry, so it shows us a little bit of a look into how businesses feel in that industry, and it's pretty much as expected, so nothing really worth catching our eye or anything going on with, really. Then we had Powell testify again on Thursday. This time, the dollar didn't take it as bullishly. He sees inflation and wage growth picking up, though, this year, which is a more hawkish terminology, as fiscal policy is what he sees putting the upward pressure on inflation. U.S. dollar did sell off, though, afterwards, so that's showing that the dollar downtrend is still relevant, and that downward pressure in the sellers looked still to be buying the rallies in the U.S. dollar, so we'll have to keep watching for that. Manufacturing PMI beat expectations, and again, U.S. dollar continues to slide. Then on Friday, we had pound construction PMI beat expectations. This is, again, our Purchasing Managers Index for the construction industry. Not too much movement caused off of it. Carney spoke afterwards as well. Very uneventful. He was talking about the history of money and cryptocurrencies. Nothing really important for monetary policy or anything we really watch with inflation or the Bank of England's expectations. So really no tradable event going on there, but we did have CAD GDP afterwards, which was as expected. However, the Canadian dollar continues to sell off as we go into the Bank of Canada meeting this week, and there hasn't been too great of data since the hike that Canada enforced back in January again. So we're going to have to wait and see how Canada continues to perform with this rate hike this week. The pound's Theresa May, Great Britain, the UK's Theresa May spoke about post-Brexit relationships on Friday, which we did see a little bit of a bounce in the pound on Friday, but nothing really going on. Again, another not too eventful happening there. So not too crazy of a week last week, but that all leads and makes up for what's going on this week. This week, starting today, March 4th, we have an extremely event-packed week. We have NFP on Friday with the US dollars monthly unemployment report, as well as 4 separate central bank meetings this week. So we have 4 different monetary policy central bank meetings going on in the markets this week. Could have some very extremely strong volatile trades this week. Really a lot to look out for. Starting with Sunday, we've got the Italian Parliament elections going on. It doesn't look like there's going to be a majority, as the front runner looking to win are not looking to have enough for majority. So we'll likely see a political gridlock. No real risk of volatility in the euro. Nothing really too crazy to worry about. Then we have China's CPI. Services PMI, which could present a Sunday night trading event in the Aussie and New Zealand. I advise against it, but it could possibly, if you saw that perfect setup of yours on the Aussie and New Zealand and you need a little bit of volatility in the markets, that could be enough to give it to you. Monday, we have Pound Services PMI. Again, this is the services sector Purchasing Managers Index to get a gauge of how businesses feel. Then we have the current account and retail sales out of Aussie on Monday night. These are going to be totally overlooked by this right here, which could use this as an entry point to get into an Aussie trade prior to the rate statement to try to get in profit, lock in some pips so you can go into the meeting with risk off the table or less risk on the table to worry about. So that could be a good entry point. However, this is really going to be the news of the night for Monday. The RBA rate statement, they left rates unchanged last meeting at 1.5% and are definitely likely to stay that way. This meeting, again, they certainly were more optimistic though last meeting, but there hasn't been much data since then, so not much has changed. They did have one beat jobs report in between there, but nothing really else except for that. So we're going to have to watch for their hawkish or dovish tone to see what they're going to be looking for moving forward. Taking us into Tuesday, then we have the Australian GDP report, quarterly report. This is a very significant report. So the Aussie's going to have about a 24-hour window here of some strong trading opportunities. The GDP is a quarterly report. They missed last quarter, so we'll have to see how this one has recovered or not in the economy, how their production's come since then. Taking us to Wednesday, we have CAD's trade balance here in the morning at 8:30. Following that, we have the Bank of Canada rate statement. They hiked rates in January, the beginning of the year, which brought a lot of volatility to the CAD. They hiked the rates up to 1.25%, 1.25. CAD was extremely volatile, so it moved about 100 pip swing in either direction. So you have to keep this in mind if you are anticipating or planning on trading the Bank of Canada's rate statement this week. If you are trading it and you're a swing trader and you have about 60 pip stop losses, and that's around where you see you need to put your stop loss based off your analysis on this trade, 60, 70, 40, 50, whatever your pips amount is, and there was a 100 pip chop in either direction last time 2 months ago off the same report, maybe you either don't trade that report or you greatly reduce your risk size using our position size calculator to determine a smaller risk so that you can afford for that 100, 120 pip move to go against you and still move in your direction. I don't really recommend trading that way, but just make sure you take into your consideration how strong this Canadian dollar reacts to these reports in the past, and make sure you apply that to how you react to them in the future. So it made 100 pip chops in either direction last time, so make sure you anticipate that. Since last meeting, we had missed, then beat CPI, so mixed reports out of CPI, and a badly missed jobs report. GDP both were as expected, so kind of a mixed bag. We'll have to wait and see how the Bank of Canada takes this. Nothing really too crazy, but we'll have to see how they anticipate this data and how they read it and what they say about it moving forward. After that, we have out of Australia and China trade balance reports. Difference between imports and exports. This is a double event for Aussie, so could offer a decent trading opportunity with double news events. Nothing's too crazy with either of these reports, but it's usually enough to get some decent moves. Thursday, we got the European ECB rate statement. They left rates unchanged last meeting at 0% and are likely to remain unchanged again this meeting. Last meeting, they saw very few chances to hike or lower rates, change them at all this year. No market surprises, and the euro chopped around. Since then, CPI was as expected. Poor PMI numbers across Europe came out since then, but Draghi was pretty optimistic sounding in his speech on February 5th. So another bit of a mixed bag out of Europe. Their QE remains. We'll have to wait and see if they have any adjustments to that or if they have any future outlooks of rate hikes changing in any way. After that, we have the Chinese CPI and PPI numbers. Again, these are inflation numbers, and out of China, though they're not that significant, it's still something worth watching and could cause market movements. Then after that, we have the Japanese Bank of Japan policy rate statement. Again, you guys know these Bank of Japan meetings are typically not very volatile. However, they kept rates unchanged last time, and their monetary policy remained unchanged last meeting. Rates at negative 0.1%. QE does remain, and they said it's going to continue to remain as long as necessary to hit their 2% inflation target. Economy is moderately expanding now, but inflation still remains low. Japan's inflation is significantly lower than a majority of the rest of the developed world, so they are very dependent on their inflation numbers. They broke out of that range as I showed you on the technical charts, so they do look very bullish technically. The economy has picked up more recently since in the past couple months to the beginning of this year than it has in years and years and years. So definitely some more bullishness out of the Japanese yen on both technical and fundamental side, as I will continue looking for buys in the yen moving forward. This takes us into Friday. We have the pounds manufacturing production month-over-month reading, leading economic indicator gauging productivity of the economy. So this is something to watch for the pound. Usually causes a decent 30, 40, 50 pip move, and it's something to be watched. Then on Friday, we also have the double employment reports like we do so often here out of the CAD and the US dollar. Canadian dollar has their unemployment report. It's likely to be very volatile. They missed last month, and the Bank of Canada is pretty dependent on this report, so this is definitely something worth watching, noting, and responding to, as this could cause some very strong volatility, as well as the U.S. dollars unemployment reports, also known as NFP, the non-farm payroll reports that we get the first Friday of every month. Last week we didn't get it because the first Friday of the month was too early in the month, but this week we get the first Friday's NFP. We had a very good report last month. However, as you guys saw, this downtrend that the dollar's been in, it was not enough to pull it out of it, and the downtrend did continue even though we had strong data. The dollar's kind of bounced here now, and we're at an inflection point, so this could be a key determiner for which way the dollar's going to head in the short term. We'll have to watch and see. Missed data could continue the downtrend. Another strong reading could be back-to-back readings that might be significant enough to break structure and reverse temporarily at least this downtrend. But that's something we're going to have to see and anticipate to watch this meeting and try to get an idea of what price is going to do with the dollar and how it's going to react. All right, so that pretty much covers this week, guys. Don't forget, it is a very news-packed event week. Make sure whenever you're taking trades or managing trades, you know when these events are coming up. You do not want to take silly losses because you were unaware of these events. Even if you don't give a flying hell about fundamental analysis, you need to be aware of it and not let your trades get taken out or stopped out or messed up because you were unaware of an event. That is not a valid reason to lose a trade. That is a human error. That is a mistake on your part. So if you have losses in your trading that are occurred over news events that you didn't know were there, that is your fault. You need to fix that. So stay on top of it with these. It's also the end of the month, so go ahead and flip over to your charts and check out your monthly candle closes. We want to see at the end of each month how the candle closed to give us an idea of what key levels were broken, key levels were respected, reversal patterns, support and resistance. All these things on the monthly chart are very impactful on the lower time frame. So at the end of each month, you want to make sure you do that. This was the end of a month, so make sure you do that this weekend and are aware of what's going on with the monthly analysis. But that should wrap up this video for you guys. I hope you enjoyed it. I hope you get a lot out of these. Please leave comments, likes, anything to these pages if you like it. Subscribe so you can see more when they are released. And I appreciate you guys taking the time to watch this. Thank you very much for the support, and I hope to talk to you guys again soon.